Yes, thank you for coming first. Ted suggested I give this talk, and standing here in front of you now, I wish he hadn't, but you'll forgive me. It is an opportunity out of a master's research thesis to talk about a bit about the thesis. It's an exploratory work around the topic of peak oil and oil vulnerability, and I'll go into that. And probably its main interest, I think, is that it is a bit of work done in an area where there is very little academic research, for reasons I'll try and touch on too. The quote there is a quote from Franzi Poldy. It's from a 4-page paper, Public Understanding and Support for Sustainable Energy. I didn't start my timer, excuse me. And which was an online conference. It's a very good paper, and it became the basis, I guess, of my thinking about doing this research. In it, Poldy talks about that our understanding of energy in relation to our society and economy is fairly incomplete, and argues for a better understanding of that that will enable us to understand the energy transitions that we're going through. And we tend to think of energy transition, or at least gets talked of in a lot of the popular media, as about some sort of seamless transition from a fossil fuel-based energy system to an alternative. And Poldy's arguing for a fuller understanding of that. They just recently completed, Barney Forum and Franzi Poldy, the 2002 Future Dilemmas option for 2050 for Australia's Population, Technology and Resources and Environment, which was a report to the Department of Immigration and Multicultural and Indigenous Affairs. So that was a fairly large-scale study, which was, I guess, the energy implications were toned down, and it was later picked up to a degree in a paper, a dissenting paper almost, to their own work, called Between a Rock and a Hard Place, Australians' Population Options out to 2050. So to a much smaller degree, I've based that around saying, all right, what is our energy futures? What do we need to understand? And I was living and working, and have been for most of my life, in rural communities. How would that be reflected in relation to planning and policy in those communities? And at the time I was, the research question, I'll come to it, working up in northwest Queensland, so I applied a case study. So the question became, what will be the possible effects of oil vulnerability upon Australian agriculture and remote communities? And again, I emphasise this is a master thesis. There's a whole lot of work that could be done just around any of those words in there. In relation to the research, what I was looking at was depletion of conventional and non-conventional fuels, and the ramifications for the economy as I know it. So it was a review of the literature setting out the peaking of world oil, or possible dates for depletion, supply issues, a review of the literature around the linkage to GDP and the economic activity to energy, including energy return on investment, that will establish the situation of oil vulnerability. So I was saying, well, what is oil vulnerability? What is the event that causes that concept of oil vulnerability in society? I have a look at energy use in agriculture, just in terms of what was appearing in literature, so forth. I look at policy positions and policy failure as a component of it, because, and I'll come to that, they all link up. And then a case study undertaken in the Northern Gulf region. So basically, tried to do a schematic of it for this talk. I don't know if it'll work, but those components there, if you take those areas I mentioned of study, the policy, the peak oil, the concept of rurality, agriculture and economics, and how they all overlap. And my research scope takes in this central and then down to the case study area, so how they all come together in terms of the impacts in that community where I was working. Again, just quickly, a conceptual framework that informed that, moving through to research policy recommendations. I'll just start with peak oil. I used to give talks on peak oil prior to my study, and I stopped doing it simply because the response I got back from it was minimal. So I set off to test my own thinking in terms of that through the research. But what I used to present, and I still do when I talk about it, is this concept that just about every product, just about every aspect of our life, in terms of our daily living, has in some way energy embedded in it, and particularly conventional oil. We tend to think of conventional oil simply in terms of the fuel tank, but a simple analysis of I guess you'd say hydrocarbon use in society is quite significant. It is the primary driver of plastics, of pharmaceuticals, chemicals, processes, structures, information systems, all are very dependent on that, and has been dependent on the supply of available, and I would, ignoring externalities, cheap conventional oil. And by conventional oil I mean that is currently produced from oil fields that may involve some extraction methods, but doesn't include things like tar sands, tight oil, tight gas that you're hearing about at the moment, is principally that traditional body of oil that we've seen supplying our economy and our society for the last 50, 60 years. The little diagram you got there, it's from a paper by Robert Hirsch, Mitigation of Maximum Oil Production. I've tossed that one in because when we talk about peak oil, it's about the maximum total supply of a global accumulation, if you like, of conventional and non-conventional oil fields. Probably this concept is of interest in terms of, first off, historically it was what Campbell, Colin Campbell, who along with Jean Laharrière spoke about in terms of peak oil, that there would be a plateau of a period that would have a designated width, nobody knew at the time, and would have an undulating top, what he described as a sawtooth top to the maximum supply profile. That at that time was fairly hypothetical. There was a lot of debate. Would there be peak oil? Would we reach peak oil? And what's the point of having a timer if it keeps turning off? And that debate, I guess, to some degree, still continues. But basically, we are now talking about plateau and profile of plateau. So what we're seeing at the moment is, and this is an actual representation from International Energy Agency data of production of, and in this case, both conventional oil without this has been drawn up talking about shale oil, US shale oil, but basically non-conventional oils, is that we have seen since probably 2005, 2006, a plateau of production of conventional oil with a bandwidth of about 4%. So we are travelling across that plateau of conventional oil around 73.4 million barrels you'll see in the red line there, that is the decline since January 2012 of conventional oil, but it is at this stage difficult to tell what the length of that plateau will be. Basically, up until they're the most recent figures I've seen, that gives the shape of conventional oil as we're travelling across. You'll see in the reddish colour there, the US shale oil is basically the infill we're seeing to match, which is basically giving us the supply and the price we are at the moment in terms of non-conventional oils. Now, that's about as accurate as you can get in terms of graphing your conventional oil supply, because, as I say, this is International Energy Agency data. There is a lot of variation, but that's really the figure that the world is working on. What I did from there was also look at estimated roll down from plateau dates. And what I mean from that is the peer-reviewed published papers that I could find, both dissenting and other, that looked at the date that we would move off that plateau, so over to that side of the room, if you like. Those dates came up somewhere between, except for Jackson, somewhere before 2020. And that's fairly consistent with the thinking around that. So we've basically travelled so far on a 9-year plateau across that. Estimates of the decline rate post that are probably in the order of between 4 and 6%, but nobody really knows. Those are estimates in terms of decline rates. Best guess is based on figures drawn from studies from the literature, but we are looking somewhere at around a 4% to 6% decline, and that's not inconsistent with the overall trend of oil fields. It's just that it's if you like, tallied up to give the total supply. I had there a section, because I often get asked, well, what about non-conventional supply? And mostly the situation in the US, though it is relevant, I think, to Australia in a sense, that what we're hearing about tight gas, tight oil, and particularly tight oil, as I'm talking about oil, is that that will sort of push that date out or solve the problem. Or in the US, they're talking about oil independence and exporting oil. Looking at that, I would say that that's not going to be the case. What they're finding with the tight oil is that the decline rates are between 60 and 90% on those fields. That basically it's a treadmill of investment that is basically unsustainable into the future, because those companies are having to invest more and more just to maintain production at a steady rate when you've got a 90% decline rate or a 60% decline rate in those fields. There's also, I can recommend, if you're inclined to look into that, the study by David Hughes on that is a really good quality study in relation to that, and that's where some of that report comes from. But a small example is the Monterey Shale field, that was cited as having 64% of all the recoverable tight oil reserves. I pulled that from the post-carbon because it's just an easy graphic, but recently the Energy Information Authority in the US admitted that they were wrong. They downgraded those estimates by 95% because they were basically based on press releases, oil company statistics, etc. So there's a whole grey area in there, but basically, that is the problem we are facing, that there is an expectation that there will be continued supply, but into the future there's more likely to be a depletion situation.
Sorry, what does it mean downgraded by 95%? Does that mean the figure is only 5%
of what they said? Yes, that's it. Yeah. In Australia, we're seeing that already. We know that Australia's crude oil and condensate production is declining. It's fallen there, those figures, from 650 barrels a day. We basically peaked in Australia around 2,000 to 430 barrels a day. And it's predicted to, sorry, I've got a mistake in there. No, I haven't. From 11,001 petajoules in 2008, 2009 to 511 petajoules in 2016. There are the possibility of major discoveries in Australia. Certainly, ABARE relies on that in terms of its predictions, but I would argue they're not likely. And I think, referring back to that interest in tight oils, tight gas, and the hype around that you saw in the US, similarly, there was a great expectations in the Cooper Basin, but the reports coming out of the initial studies there are indicating that's not as productive as they thought it would be. The other interesting, I guess, if you like, issue around reserves, and this is from Barney Forum's work, Powerful Choices, which was a major study Barney did in relation to transitioning our economy from a fossil fuel to a biofuel economy, was that really when reserves reach around 30%, with an energy return extraction of 101, that is probably not economically worthwhile, the cost of production. It actually costs more to produce that oil than it gives in benefit. And Barney modelled that out at around 2021. Now, there are variations on that, but it's an interesting thing that we will find that our oil fields become unproductive, and that places us in a situation of importing oil at a time of declining global oil supplies. The other bit I looked at was the literature around energy, because I went back to looking at what a decline in a major primary energy source would mean to us. And there is indeed material around looking at, there is a direct correlation between net energy and GDP. Conventional oil has a higher energy return on investment as it is usually easier to find, produce, and resulting delivers a greater return to the economy in terms of available work, and that alternatives in terms of scale, energy type, use, and ERI and timeframes cannot replace conventional oil and natural gas. Also looked at work around neoclassical economics, tends to focus upon models that primarily recognise only labour and capital, and I guess you could blame Solow for that, but in terms of that division, but there are papers coming out now, Hamilton War, that have looked at that relation to energy to GDP more significantly, and found that there is a much significant relationship between energy use, net energy, if you like, and GDP. In fact, studies such as Murphy and Hall and Hamilton point to it being at least 10 times greater than traditional economic thinking. And that's sort of, they had labour and capital in there, and somewhere in between was innovation and creativity, but tended to look at energy in terms of its actual cost of getting out of the ground as a factor in the economy, not its role in terms of enabling and delivering that economic activity itself. There is the most recent work on this is a working paper out of the IMF that points to that vulnerability in real economies and those particularly dependent on energy inputs would be high, would be far greater affected by the shock of oil price increases and supply disruptions than the rest. And look, that's pretty obvious if you think about it, but basically that went on to look at the elasticity of it and finished up their study looking at, and they're going off doing more work, which will be interesting to look at, that really saying, well, if there isn't that elasticity there, then if it only takes 1/3 of 1 percentage point to increase oil supply per annum to support additional GDP growth of 1 percentage point, then it must also be true that it would only take a 1/3 of 1 percentage point decrease in oil supply growth to reduce GDP growth by a full percentage point. And as they point out, the declines in oil supply growth are being discussed are far more significant, and when we're talking about potential per annum declines in just conventional oil itself are around 4 to 6%, there is a significant potential for impact on GDP. So it's likely that we'll, hang on, I'll just check my time. Better move on. We'll see an industrial economy and infrastructure not geared to a possibly much lower energy profit ratio system, and problems with capacity to initiate required changes when energy money required is not available. It's that notion that you find in businesses where you need to check your cash flow and your business is dropping off, you need to invest to change your business model, but you can't change your business model because you haven't got the cash to invest. I think we'll see a modern culture not geared to dealing with a lower energy profit ratio situation. We've been used to abundance for a long period. Events will be asymmetrical, not linear. We see it in natural systems, and I think we should start thinking around looking at how that would be manifested in an economy. I think we're moving into a period of degraded environment, effects of climate change, both reducing capacity and posing costs at a time when that societal income is declining. That's around NRM, sets of managing NRM. I'm not arguing that means collapse. I'm not a collapse theorist, but I mean that it will mean a significant change in how we go about the way we do things. In terms of rurality, looked at research around that, and I'll push on because of the time. Energy and agricultural industrial energy is, even though there have been significant reductions in energy inputs through both technology and production methods, we are still seeing around a 7 to 10 calorie, it depends who you read, input directly into fossil fuel to produce 1 calorie of food. Now, so whilst a lot of this is beyond farm gate, it is still a very significant input into it. We have seen increased cost for rural residents. There's very little work done on what that will mean in terms of how rural communities adapt to increased fuel costs, increased energy costs, particularly as we've seen a centralisation, the opposite, of rural services in most rural communities. We could see a disruption of long-chain food production systems, an increase, as I mentioned, in climate change response costs, what I call system section vulnerability if you have failures in your long-chain systems or in the suppliers of that, because we've built industrial agricultural systems with inputs, whether they're plastics, chemicals, technology, into that. If those systems break down, what does that mean? And I guess what could be called section replacement failure. In the past, if we've had a problem with a breakdown along a long system, we simply threw more energy at it. Now in a constrained situation, that may not be possible. So there's work in terms of thinking how you match that. Work by Dodson and Sipe and Sloan, the paper cited there, have identified the possible changes due to oil vulnerability in terms of Australia's regions are changes to distribution of agricultural types, changes to the intensities of agricultural land uses, shifts in primary mode of transportation of agricultural products such as road to rail, possibly, restructuring of settlement patterns, concentration or dispersal as communities adapt to higher transport costs, and abandonment of some land types or sub-regions if production and transport costs become prohibitive, and that relates back to the study region that I'll come to. Oops. Policy. The policy situation is reflected, and I put those up just to reflect two approaches because they're my favourites. One is, if you like, the political system. We're not going to change anything because our way of life is immutable. The second one, I love this cartoon, is it really is about economics. That if we just keep on throwing more at it, we'll eventually solve the problem. And in a depletion situation, that's not really it. Identified a number of policies issues. Policy presents to government, community, industry both analysis and direction for planning. For example, land use policy drives land use planning and hopefully sensible direction to state government. Timeframes and scales are often long and have inbuilt inertia and not responsive to change. Infrastructure developments may have high embodied energy inputs susceptible to change in energy availability and costs which could lead to project failures or social perturbations. Academic research and community input can inform policy setting, as with the increasing peer-reviewed papers around peak oil. However, policy development can be suppressed or hindered by lack of or even hostile philosophical environment within government departments. And I know that personally. I worked for the Department of Primary Industries. I don't work there now, so I think I can say it. I tried to raise energy as a policy area for consideration for the Department of Primary Industries out into the future, and was told to pull my head in or a big kick. So you do, as a public servant, get those pressures in terms of what you can talk about and what you can't talk about. It's in terms of authorising environments. So public servants and policy writers may have to wait for clear authorising environments to begin even broach difficult topics. Until appropriate signals for research or policy development are available, Australia will increase risk of risk management failure in regards to this event. What I found when I did a review of the policy frameworks, and just to break it down a bit, there was a clear, I'd say, lack of or avoidance of the issue at the federal level. It might seem a fairly strong statement, but the Energy White Paper, which 2012, which should be the paper to set an energy framework that looks into the future and guides, if you like, and an Energy White Paper can do that. Subsequent policy papers flowing from it virtually wrote off the concept and moved on within one paragraph. So there's very little recognition that can inform policy there, and until there are, well, I would argue therefore there are no clear signals to overall policy development. If your energy paper was saying, well, there is a risk out there, or there is the potential of a risk, not that it is no problem, then other policy will start to nod to that and look in that. An example of that was the, if you like, and I'll again use the word suppression, it was in that time, and it's not this current government, it was the previous one, the paper by David Gargett out of Bureau of Infrastructure and Transport and Regional Economics, a really high quality analysis done by the Department of International Energy Supply, particularly long-term oil supply trends, that was all the way up to having a report number and executive statement in the front, and was pulled at the last minute and replaced by another study with the same number on airport traffic out of airports. That pointed to, and as you can read there, 8 years, it is likely that crude oil production will plateau in the face of continuing economic growth after that 2000 drop-off. So it actually flagged it, and the reason I believe it was removed was you couldn't have an energy paper that didn't reference such a significant paper from the Bureau of Infrastructure, Transport and Regional Economics just at the time, just a year or so prior to the development of the energy paper. It was just too difficult. In terms of state studies, and there has been some work at the state level in terms of studies, particularly out of Queensland, the then Environment Minister Andrew McNamara was pushing that, and for a brief time in Queensland there actually was a state study and a number of work done, and as of 2011 there was a second study done, but it's disappeared. Nobody can track it down. And individual state governments have done it. Sorry, I jump back to the federal. There was the Senate inquiry that looked at oil vulnerability in 2005 that produced a very good report that but had very modified recommendations placed on it, and nothing happened from that. There's been a few studies since. There was minimal recognition of oil vulnerability. I went through and looked at policy in relation to agricultural research. This was consistent with the finding of Dodson and Sipe in 2000 in relation to urban land use and transport policy. References are scattered and infrequent, where energy is considered as in terms of usage, often as carbon output. No considerations in changeability, cost of energy, return investment are taken into account. So I'd put forward, whilst recognising the political and philosophical pressures, I think this will be viewed in terms of policy as a significant failure of duty of care in relation to that. So those were the, if you like, those levels that I looked at. The area that I looked to apply it to in terms of research was where I was living at the time, and you'll see from there that I chose that region because I was running NRM South. It was a region I knew. I'd worked up in there for 3 or 4 years, so I knew the region and a lot of the people involved. That area itself is slightly smaller than Victoria, to give you a scale, 214,000 kilometres. Its major rivers, the Flinders, Leichhardt, Gregory, all flow north into the Gulf of Carpentaria, and anything there you could fly up the coast and actually plot from the plain the watersheds where on one side it flowed to the Gulf and the other it flowed into Lake Eyre. It's It's give you a few shots of what it looks like. It has a population of just over 32,000. Mount Isa is its main centre, and it contains 25,000 roughly residents. It has small service towns to go back, running along the main axis there on the road to Townsville, Cloncurry, Julia Creek, Richmond, Hewenden, and up in the north are Burketown and Corumba. So you're thinking that most of your population is there. There's a very low population density indeed, and a lot of it is just flat, rough country or mitchell grass downs. Serviced by a rail line from Townsville, sealed roads on most of the main roads, and then beyond that it's all dirt tracks of varying condition. Most of the region's isolated in the wet for long periods. If you're off the main roads, can be up to 3 months as the wet rolls in. The main industries are, we could say in the agricultural industry there is cattle production, breeding and grazing cattle, mostly, well, on the landscape. It's they're large-scale properties, either on the Mitchell Grass Downs or the rough country. So I used to say it's low, it was a bit like a national park with cattle on it. It was 95% intact in terms of landscapes. The other main industry, of course, up there is it is a strong minerals producing region, particularly Mount Isa in terms of copper and lead, with initially Mount Isa mines, but now Extrata. There's up this way is I've forgotten the name of the mine, but sorry. No uranium mining active. There is a zinc mine, which Century Mine, and over towards Julia Creek is another BHP Cannington, another large mine. So there's potentially quite a bit of uranium up there, but with the ban on uranium mining, there's exploration, but there was no mining. The last uranium mine there was Mary Kathleen. So I'll just keep going. The case study was built out of living and working in the region, a set of 23 formal interviews, an informal and research process, and a review of available literature. What I did was go to sectors, particularly and primarily because it was, I figured mining would do whatever mining did in relation to oil vulnerability, was working with the pastoral land managers in terms of producing the beef cattle for sale and market, did interviews spread across mayors and CEOs with local government, spoke to government people in politics and in emergency services, tourism, mining, 2 interviews, and general community. And it was around the context of how they used energy, how they saw the vulnerability, and how they saw it affecting their community and what adaptation. Then broke it down, if you like, into those sectors, into what that meant for them in terms of what their vulnerabilities were, what their fuel use was. So, for example, pastoralist was 15 to 20% of the business and essential for business operation costs. Where their economic vulnerability was, this is just a summary, issues around isolation, how they could adapt roads, cyclones, and adaptive measures, and went through each in terms of looking at what they were telling me. I've just pulled two just briefly just to pull out some of the key points rather than go through the whole lot. Pastoralists were the most interesting and actually a great pleasure to work with because there was just such an honesty in terms of the issue and their understanding of it, even if they'd not heard of it before. And I found that when talking to farmers in general, I guess, that fuels are very much, and energy is very much a part of that operation of your business, so you understand it very well. And that's what I found with the pastoralists. They understood their fuel use well. You'd say, well, what's your diesel use? And they'd cite it almost down to the barrel in terms of usage, because that was a major cost. But what came out, of course, was that they were very fuel dependent. Probably, as I said, between 50% and 20% of their expenditure was there. They relied on fuel-intensive processes, and you just got to think about it. But they were mustering, mustering vehicle use, helicopter use, pumping of water for some, because not all had access to electric supplies, or their water supply was so deep they couldn't use solar. Road and stock transport. They very much felt they were price takers. Whenever the price went up, it was passed on to them. They were at the end of the line, so they couldn't adapt. Many had purchased second properties, so had debt. And we saw that a bit coming through post the live meat trade, that most had gone out and bought a second property. It was pretty much the norm up there to improve their farming model. The prices of leases had gone up recently, and so they'd borrowed almost 100% credit to purchase a second property at, say, 6 to 8 million. And so there was that susceptibility there. Plus they were shifting cattle that they were breeding on, say, rough country down to the other end of the catchment on the Mitchell grass downs to try and fatten them up a bit. They said that price of fuel doubled for any period of time. They would not remain in business, and they based that on what they saw in the 2006 price increase. They felt there was a real vulnerability there, and that's a real issue for the North if that is the case. And in terms of looking at the markets across the whole lot, it wasn't that they sold all to the live trade, all to this. There was a real mix of markets, but increasingly Asia was becoming a market for them. So it's a job of work further, but in terms that we have a presumption that international markets will keep growing, they have an expectation that they will continue to grow their production to sell into international markets, and that may not be the case. In terms of adaptive measures, they felt they had very limited capacity to adapt, and since 2006 they'd made most of those changes, and those changes were very practical changes. They changed how they fenced so that they didn't have to drove as much to chase cattle. They changed measures in terms of turning on and off water supply to bring cattle in at certain times for mustering, where once they used to try and chase them. They use things that they call cattle traps, where cattle come in for water and then couldn't get out. They're starting to use telemetry a lot more in terms of, at least the more advanced ones, in terms of monitoring watering sites, opening gates, etc., because part of your fuel cost was just driving continuously long distances, and we are talking about very significant distances just to check a gate or check that the water trough's full. But they really did feel that they were sort of at the top end of their capacity to make major changes in terms of price increases. There wasn't much flexibility. They'd done most of what they could have. And how am I going? All right, I better hurry. one interesting comment from them particularly was they all felt they could go back to droving cattle on stock routes. And so suddenly where we'd been talking about turning stock routes into environmental corridors or closing them down, suddenly we now have a need for stock routes, perhaps to shift cattle. The other interesting thing was most of them said they wouldn't want to go back to that, but life then was much harder and they didn't know whether their children or the next generation wouldn't. Local government, sorry, I'll speed up, was a different thing in terms of the vulnerability was identified as loss of social infrastructure as a key risk, particularly those communities you saw along the highway. Their main income, interestingly, was road contracts. 50% of the employment in the town was held up by the Queensland government sort of mandating that councils made roads. If that fell through, they'd lose half their towns, and most of them said if that happened, those communities would not be viable into the future. Increased difficulties they identified in dealing with climatic events, but they felt they were linked, even though they were isolated, they were linked across those communities, and they saw that as great stress. I guess another vulnerability I didn't put in there was, and again it gets back to that policy signal thing I talked about. If there are no signals for government coming down, then there's no incentive or no authorising environment or no direction set for those communities to actually start thinking in that area of oil vulnerabilities. So, you know, you were very much dependent on the philosophical philosophy of the council or the CEO in terms of it. But local government does have the ability to implement community-wide planning responses, and they have good linkages to state government. So overall, I felt the community faces real risks in terms of fuel costs, failure of sections of the pastoral industry, distance isolation, etc. I felt the findings were that the community will adapt to oil vulnerability, and that's the thing that came strongly through all the commentary, was that social cohesion. They said it'll be tough, but we can manage it. But the local preparedness and planning was non-existent, and any work in that area would help build their thinking and their resilience. An interesting thing in terms of the north was that though they may be able to reduce their models to a lower energy structure, if you like, or it may not give them the capacity to deal with climate change that we're looking in the north. So I would argue that probably into the future there is a strong risk that a lot of northern Australia just will not be tenable, and what that means, I think we need to look at it. In terms of quickly running through, looked at research needs, and I chucked in Andrew Campbell there, but I think it's a good statement. But I would argue the planning for both the future increased price of oil and possibly liquid fuel constraints in Australia in relation to our industrial agricultural system should look at three main areas, being timeframes and possible changes to oil-based fuel stocks, so to give us the parameters we're operating in, the vulnerability of industrial agriculture to peak oil-driven energy shifts, and what mitigation and adaptive measures would be possible. Research would need to look at farm energy use, because though there is some, it's not there beyond the farm gate and in the long chain systems. And I think probably I'll jump through that. So basically, to sum up, the research itself, I think, is of value in terms of setting directions, I think, for possible research around vulnerability and oil vulnerability for society. I think there is a need for communities to be supplied with information that can better assist them in travelling forward into that future in terms of how we understand what those changes will mean for agricultural production, rural communities, and also how we move forward into that space, how we can best model that change. So thank you.